touch base. So the next thing, the main important things, as I said earlier too, we have 28 indicators and oscillators. Um, they are technical indicators that kind of shows the trend of the market. Different people have different choices. But my mentor kind of showed the moving averages, the regular moving averages or the Hulse moving average. If you're using the moving average indicator, relative strength index, RSI, moving averages, convergence and divergence, also known as MACD. Take a look at moving averages. So again, moving averages is just like average of whatever the period that you select, So if you select like a 10-day period, then it's like average for 10 days. It's not weighted. Weighted average is different. So it's basically a stock indicator used in technical analysis. What we're doing, the chart analysis with indicators and stuff is a technical analysis. It basically smoothens out the price data for whatever the time period that you choose. And I'll get to it in a minute. The short-term moving averages crosses above a long-term moving average or the price index itself, then it's an uptrend, a bullish trend. And if the short-term moving average crosses below a long-term moving average, then that shows a downtrend, which is similar to a bearish trend. So we can take a look with 8 and 21 day moving averages. Again, 8 and 21 days are the Fibonacci numbers. If you look at the Fibonacci sequence, just kind of adding 2 numbers before that. So if you add 8 plus 3 is, 5 plus 3 is 8, then add 8 plus 5, that becomes the next number, and then you keep on adding 8 to that shows whatever that next higher number is. So it's just most of the technical traders kind of use the Fibonacci numbers. We'll get to the details of retracement and channels and stuff if time permits today or maybe in the next session. So that's selecting the period. This is the fast moving average, and this is a slow moving average as compared to this one. So some folks use 50-day moving average against 200-day moving average. Some people use 5 versus 10. So again, I'm just sticking to that Fibonacci numbers 8 and 21. And Hulse moving average generally that's around, I guess, 9 or so. Let's take a look at the chart. I'll go back to the, so I'm looking at a Hulse moving average. Again, for the folks who are new to TradingView, this is a very useful technical tool. When you go to tradingview.com under charts, when you select it, this is the location you enter your ticker symbol. Okay, if you want to enter Apple, you select Apple, then it gives the price index for that. If you select the S&P 500 futures, mini futures, then it gives the price index for that. And these are all the durations, the different periods. It starts with a minute, 5 minutes, 15, 30, 45 hour, 4 hour, 1 day, 1 week, 1 month. I just basically kind of start, this bookmarked it in a way to kind of see these durations, which is generally used for the analysis. Again, this is the bar charts, candles, and the line stuff that we just discussed. Again, if you put a star next to it, you click on it, then it becomes your favorites. And when it comes to the indicators, you click on this FX here, and that's when it pulls up the indicators and strategies. Again, I clicked on the star to kind of like make these my favorite. Generally, I stick to these. So if you're just starting out new, then you just enter Hull moving average. You get it, you click on the star, that's how it becomes the favorite. So if you click on favorites, then that's how it shows up here. Right. So I already have the Hulse moving average selected here. So if you want to change the color or any settings, you click on this, the settings. And if you want to hide it, you click on hide. The indicator is hidden. You click on show, then you can see it. So you click on the settings. Length is default 9. And if you want to select the style, you can select the style, increase the thickness of the line and stuff. So this is just basically the moving average for whatever the period that you selected. Let's say here is 9. So what I was saying here is, we'll get to this in a minute, but first we're starting with the Hulse moving average. So if the moving average crosses above the long-term average, in this case, it's only 1. So if it crosses above this price index, then that's a bullish trend. So let me switch to a line. So that way you can see it clear. Zoom out a bit. All right. So this dark gray, that's the price index, whatever this S&P 500. It's an index of 500 companies, the leading companies, with a portfolio of like $10 billion and plus. So whenever this price goes over this Hulse moving average, that's a upward trend, a bullish or buy signal. When it goes below that Hulse moving average, that's a downward trend or a bearish trend. So if I switch to the candles, you can see this whole thing is green. It's all like bullish upward trend. But if I switch to here, you see that the price index falls below the Hulse moving average. And that's where you can see it's all bearish that, it's all like, there was more selling. It was a downward trend. Yes, sir, Fazil, you have a question.
So when it goes up the HMA, how long generally it stays in the upper side? Is there any normal like 3 days, 4 days, or it just goes up and come down the same day, or what's the?
No, that again, it's not time dependent. These indicators are there to help us kind of gauge the trend where the market is heading. But nobody will be able to pinpoint what the duration would be. There's a lot of things involved. There
So
could be just like, any change in any news or any federal policies, anything. So the market kind of fluctuates a lot of things, a lot of factors.
sure. So let's say if today I see the candle reaches the HMA, right, and it's a buy signal,
So
and it's
let's look at
going
this.
upwards.
Yeah, let's look at this. So this price index jumped above this HMA. So when it jumped here, that was 24th September, 4 days back, right?
Right.
And then it showed an uptrend here also. Like you can see like the direction of this line, right?
Mm-hmm.
So that basically in a way gives you a better idea.
Right. Is that a
And
day's range, or this few hours just goes up and then?
no, I mean, like, see, when I'm under the uh, day chart, so it's giving me based on the days.
Okay.
If I select the hourly chart, you see, it gives me a closer picture. If I select the 4 hour, it gives me a different picture. I mean, like, it's just like averaging out whatever the duration that I've selected. So if it's 9, that means 9 weeks, right? This moving average is the average of that. If I'm selecting a day, it's basically 9 periods of whatever I select here.
Got it. Thanks.
So again, at the end, probably when we look at all the 3 indicators together, you'll get a better picture. So the first thing first is when the price goes above the Hell's moving average, that's a buy signal, uptrend, bullish trend, right? And if the price goes below the Hell's moving average, that's a downward trend, bearish, and sell signal, right? So we are clear on that, right? On the Hell's moving average.
Yep,
The
thanks.
second moving average is 8 and 21 day. I'm just selecting 8 and 21. I mean, you can select 50. Some people select 50 and 200. So let me close this because if I'm in the free version of it, so it allows only 3 indicators. So I cannot have more than 3. So I may have to even close these 2 indicators. Going back to the candles. So let me go to the moving average. I started one moving average. Let me do another moving average. So I go back here in the settings. The default is 9. Go to the inputs. Saying okay, make it 8. Making this orange. So the 8 days orange. I'm clicking on the inputs. I'm going, making it at 21. I'm just changing the style. Just make it dark green. All right. So this is a 8 day. The orange one. The green is a 21 day moving average. Again, moving average is the average of whatever the duration is. All right. So we'll come down here. So this fast moving average that I said here is like the short term or the fast moving average crosses above long term moving average. That's uptrend bullish, right? So if it crosses here, it's basically showing this whole uptrend. And when it crosses the fast moving average or the short term moving average kind of crosses below the long term one, it shows a downtrend. All this is bearish. So if I were to do it similarly with like, 50 versus 200, I'll see the similar pattern. So you see here, a perfect example in March. When this fast moving average crossed this slow moving average here, it's all bearish downtrend. And when it crossed again, it showed the bullish trend. Then again, this was closer because it was moving sideways. Then again, when the gap increases, you can see the bullish trend. Any questions on that?
Mohit,
Yes.
for the first moving average, you didn't specify any specific days. You chose only number 9, right? So 9 means
No, here. If you look on the screen, Pulse moving average is kind of stuck to the default 9. But if you look at this moving average, you see 8 next to it,
yeah.
and then you see 21.
Okay, got it. So for Hulse moving average, you are saying that you 9 is okay. You don't have
No,
any.
you can change. You can change the default value. It doesn't, I just like wanted to just quickly show how that Hulse moving average is working. I mean, like you can make it as 21 days again, just to be exact with that, you know, Fibonacci sequence, like how I have 21 here. I can make the Hulse moving average as 21 as well.
I was just wondering, you didn't give any specific.
Yeah, so I'm just basically sticking toward the Fibonacci sequences. 8 and 21 is again from that Fibonacci sequence. Got it?
Yeah, got it. Jazakallah.
So again, these numbers 8 and 21, those are Fibonacci sequence. I'm like, I can select 50 here for the fast moving and then 200 for the slow moving.
What's the difference between?
Sorry, I just kind of muted everyone just to be clear because there was some background noise.
Maybe what's the difference between Hulse moving average and moving average?
It's just like another type of moving average. Hulse moving average is just basically one indicator that we are using against the price index as compared to the slow versus fast moving averages that we do generally for the MA or the EMA. EMA is the exponential moving average. That's slightly different than moving average because the EMA is like a weighted average. So if a candle that's here or here, it takes more weight of the adjacent candles or the days or the duration that's next to it, you know. So EMA, MA are kind of like, you know, it go like, you know, you have two indicators at a time to give you that understanding. Hulse moving average generally is by itself against the price index.
Okay, the Hulse moving average we can look as a standalone indicator, and whereas moving averages we can compare between the Fibonacci numbers. Is that all?
Yes.
Okay.
Even that, or like, you know, even if I were to just, let's say, take this indicator out, right? So even with Hulse moving average, if I were to just go to the line chart, if you see that price jumped above this moving average, that was a bullish trend here. And the price jumped below this moving average, that's a bearish trend. So even a single moving average against the price index will give you a better understanding of the
Reference
market
on it.
well.
Okay.
Yeah. Even if you look at this one, see the price jumped below the moving average. This was all bearish in March. So even with the regular moving average with one indicator, you should be able to get an idea. Any questions on the moving average? Okay. Jump to the next. So as I said, we'll just keep it simple. That's what my mentor